Are joining us on Zoom. It's great to have you. We're going to kick things off in just a moment, but today's Brown Bag series, the topic is insurance and diabetes. So very timely, and we'll say more about why that is in just a few moments if you don't already know. But first, we'll kick things off with a quick introduction of DPAC and just a little bit more about who we are. Next slide, please. So if this is your first time joining DPAC, welcome. We're so glad to have you and seeing a lot of repeat names on here. So great to see folks who are joining us regularly. So DPAC is like a big easy button. There's a lot going on in the policy world in Washington, a lot, oh my goodness, going on in DC, and then so much happening in the States. And there's tons of noise, especially right now. You're hearing a lot of news coming out. For instance, Washington's looking for a new Speaker of the House. And so what we're doing is we're combing through all of that noise and trying to separate what matters most to then empower advocates to take action, because what we know is that our voice matters, especially our collective voice as the diabetes community. And so when we raise it on the issues that matter, good things can happen. And so part of our mission is hosting events like today's Brown Bag, where we just dive into a topic that's been suggested by our audience. And today's topic is, of course, insurance. So let's dive in. We have two wonderful panelists joining us today. One is Mr. Stewart Perry, who just came on camera. Stewart is the board chair of the Diabetes Leadership Council, which is our sister organization at DPAC. So DLC works on policy mostly, and DPAC works mostly on advocacy. And so we really work hand in glove. Amanda Kaufman, as you see, who's also joining us on screen, is a communications associate for the Diabetes Patient Advocacy Coalition. So our very own two folks right here who are well equipped from their personal experience and professional experience to talk to us more about insurance. They both have connections to diabetes, personal family connections. Stewart has a family history of diabetes as well as type 2 for 35 years. And Amanda was diagnosed with type 1 diabetes when she was 12 years old. So many decades of experience from the diabetes realm to speak on, as well as decades of advocacy experience on this call too. So thank you too for the work that you do. And let's dive into our questions.
Can we talk about something other than insurance, Julie? Do we have to talk about insurance?
I know. It's everybody's favorite topic, but it is timely, Stewart, as you well know, because it is open enrollment season for next year. And that officially begins, it depends sort of on your plan. I just got a mailer that said, hey, guess what? Your open enrollment starts next week. For others, it's November 1st to January 15th. But there is a period in which folks can sign up for health insurance or renew their current plan or change their plan. And so it's a good date to have in mind. Stewart, can you tell us what this timeframe means and what people with diabetes should be doing to prepare?
Well, what it means is that normally a plan says that open enrollment means you don't have to qualify. If you're not getting in during the open enrollment period, there has to be a qualifying action. A new job, you lose a job, you get married, you get divorced. Those kinds of things will cause you to be able to make changes to your health insurance. During the open enrollment, it pretty much is pretty descriptive. Open enrollment means you can join, you can get out, you can change it, you can change your deductibles. You can do all those things that you need to do to manage your health plan. And that's why it's important to pay attention to the open enrollments, and especially if you're someone with diabetes, because, hey, managing your diabetes without health insurance is like having an umbrella with a hole in it. It's there, but it ain't gonna do you any good. So you've got people with diabetes need health insurance in order to manage your disease. It's just that simple.
Well, and looking into the particulars and the plans and really starting to prepare now, if you haven't already, to consider what your needs are, a lot of times beyond diabetes too. You've got family as well to consider. So there's lots to put into the picture here as you select a plan. But Stewart and Amanda, in your individual lived experience as people with diabetes, are there certain plans that are better suited for or provide maybe even better coverage options for people who live with chronic conditions? Stewart, I know you're licensed to sell health insurance and you are an insurance agent. So you are an expert on this. I want to start with you and then kick things over to Amanda.
Well, yeah. I mean, there are things that you need to look for in a plan? The biggest thing you need to look for is it covering what you needed to cover? And that's hard to say. You can't always look at the documents that that your HR department or that an insurance agent sends you and know whether the coverage is there that you need. Does it cover your sensors? Does it cover your CGM? Does it cover your pump? Does it cover insulin? The big problem with insurance is insurance companies know how to make money, Julie, and they know how to make money on our backs as people with diabetes. So the issue is you've got to try to make sure that you have covered all your bases. Most importantly, do the math.
Do the math, exactly. Amanda, what advice do you have for folks who are starting to look at plans, and how are you weighing this decision?
Yeah, so I'm definitely what it covers is the most important thing. Another thing I want to say in general, not a rule, but a trend is that high deductible health plans tend to be less favorable for people who live with chronic conditions. Because you're taking in the fact that we see specialists, get prescriptions, go in for routine tests and checkups, aka things that use deductible money more often than the average person. However, every plan is built differently and has different coverage options, so it's hard to really give blanket advice, but that's just something to keep in mind. Above all, it's important to know the details of your coverage. And then if you're covered by employer insurance, get to know the benefits manager in your HR department. They're a good person to ask questions and present issues you're facing with your coverage. And then I actually wanted to just plug, that's something that our DPAC advocates have actually done on the topic of maximizing the power that you have over your health plan as a person with diabetes. We've had our advocates do that and actually enact large-scale change. One advocate changed the entire plan for Arby's employees. This is a story that we just learned about this past summer. It was someone who was at Friends for Life conference in Orlando, and she told us, and now we're amazed by this. She lost coverage for her Dexcom sensor, and it wasn't covered under her employer insurance. So she wrote to her HR person and got not only her Dexcom sensor covered, but made company-wide change, and now Dexcom sensors are just covered through Arby's pharmacy benefits with a copay. And now this applies to everyone. So that's, I guess, one piece of advice that I would have is to just get to know the details of your specific coverage and see if there's something there that you can work with.
That's amazing. You said she changed the Arby's company policy. Wow.
Yeah.
That's great advice, Amanda. And I think employers are interested in having healthy employees. They want you to be able to work and be productive. And so it matters to them what matters to you, and being able to voice that and know who to take those concerns to. It's pretty amazing what you can do as one person, and then to help, right, other folks with diabetes too. So kudos to that advocate. And just know that DPAC and DLC have resources when it comes to this, whether it's talking to your own HR department, or even we have employers that we brief on creating good plans for people with diabetes as well. So a good thing to keep in mind. And also just note, if you're a Medicare beneficiary, there were some changes made that have $35 insulin covered. You may have heard about that. It's at least one option that you have across plans. So take a look at that too when considering the math and understanding what things look like for you. Some states have made changes on the ceiling sort of price, the cap, we call it, for insulin. So it's good to know that some changes are being made outside of insurance plans. But of course, doing the math, like Stewart said, and looking at your individual plan is always great. Amanda used a term, deductible. And there are a lot of terms when it comes to insurance that can just be a little bit confusing. And I think we had a stat that only 11% of people know these 4 core terms when it comes to insurance. So Jacob, if you could pull these slides up, I think we're going to have, maybe Stewart, can you walk us through premium and deductible?
Yeah, well, yeah, I can, but Jacob, let's go down to the slide with all 4 dots on it to start off with. Okay, this slide right here, because Amanda brought it up, Julie talked about it. I was doing my darndest to keep my mouth shut. And, you know, I don't do that well, Julie. High deductible health plans were invented by Congress. And they were invented by Congress when they came out with an HSA and FSAs. health savings account and financial savings account. So the issue is on a high deductible health plan is I used to say exactly what Amanda said, even stronger, which is never, ever, ever buy a high deductible health plan. But that's not always true with a chronic disease, because what insurance companies have done, first of all, they put pharmacy into the deductible, which didn't used to be the case. And so all your pharmaceuticals and in many cases, your medical devices are all as part of that deductible. So you've got to do the math and figure out what makes sense for you. What's happened, Amanda, is a lot of insurance companies have done that math for you, and then they have taken the premium and made it so high for a lower deductible that you're almost forced to take the high deductible plan. So doing the math is the most important thing during this time frame of deciding what plans you're going to take. You add up all of your medications, you add up all of your devices, you add up what you think is going to be your doctor visits. And one of the things you need to make sure of is that the formulary covers your medications and that the PPO, the preferred provider organization, also covers your doctors, so you're not told suddenly you're out of network. And you do the plan, you do the math, and then you look at the premium, and a high deductible plan may be a better deal for you. And then again, it may not. But if you just go in and look at it and choose the lowest premium or the highest premium or the lowest deductible or the highest deductible without doing that homework, it's unfortunate. Amanda, what do you have to do as a person with diabetes? You count carbs, you count calories, you count all sorts of things, don't you? You have to know when to bolus, you have to know how many units to give, you have to know what your numbers are, you have to know your time and range. You have to be a math expert. You can't flunk every math course you ever take like me and manage your diabetes anymore. So doing the math for your health insurance is the same way. It's unfortunate, but the disease we have is 24/7, 365. Do the math, choose the right plan for you that makes economical sense. Now, Julie, I apologize. There's my speech. Let me step off my soapbox. So if we're going to talk about common insurance terms, let's talk about premium. That's easy. The premium is what you pay or your employer pays for your health insurance. And that premium that you pay is normally a percentage unless you have health insurance you had to buy yourself because you're self-employed or you don't have an employer that sponsors you. So the premium is what you pay to the insurance company for the coverage you get. The deductible is your share of the claim. So in other words, an insurance company thinks of the deductible as your share. So you're going to have $1,000, a $3,000 deductible before the insurance company pays anything. And they're going to give you a premium break for that. I know it doesn't seem like it, but they are going to give you a premium break for that. So premium and deductibles are closely aligned. An HSA account, when a high deductible plan, is where you put money in a local bank or a savings institution, and you put it in to pay for those things that your insurance company's not paying because it's in your deductible or in the next thing, and that's cost sharing, okay? Co-insurance and co-payments. So a co-payment is a set fee. Every time you go to the doctor, you have to pay $100. Every time you go to the emergency room, you have to pay $100 or $50 or $250, whatever that plan says it is. Set fee. Doesn't matter whether you pay out all your deductible, co-payment's always there. Co-insurance is another form of deductible. You heard of 80-20, where the insurance company pays 80%, you pay 20% until you get to a certain dollar amount, and then the insurance company pays 100%. So,
oh, go ahead, Stuart. No,
go ahead. So that's what they call co-insurance. It's aptly named because the insurance company is sharing the cost with you under that co-insurance. The co-insurance normally has a cap. And normally after you hit that cap, and with all my drugs in my, under my deductible, I hit the cap. So the co-insurance is what you pay each time that your insurance is used. Once again, you got to do the math to understand all of this, all of these things. Julie, are you looking at the questions in the chat?
I was just about to, we've gotten some great points here from some folks, and I just wanted to share, some of them are just comments. So one person said, a high deductible health plan covers my diabetes at 100%. That's no cost for insulin or meds or supplies, and that's only available with our high deductibles. So this is a person who did the math and figured out that it made sense for her to choose a high deductible health plan. Another person wrote in to say, hey, it's not easy to know how much things cost ahead of time in order to make an educated decision on what plan to choose. And I think the three of us couldn't agree more. It's not straightforward. There are a few things you can do. One, you're asking the insurance company for a copy of that plan's summary of benefit coverage, or looking at the summary of benefits and coverage. Sometimes it's called an SBC, but reviewing what is covered and looking specifically for the kinds of things that you need to be covered. A lot of plans have cost estimation tools, so you can plug in to try to get some transparency on what things will cost you. They have doctor searches to see what, just like Stewart said, you don't want to be going somewhere and find out later it's out of network. There's a formulary drug list that your plan will have. And again, as we said, even some folks, if you're getting it through your employer in HR, but absolutely the person who wrote in to say, hey, it's not easy to know how much these things cost. It is sometimes you find out later on, or you get a letter halfway through, Stewart, that says, hey, you were taking this and now you're going to have to switch over to this because we're not going to cover it anymore. So there's a lot of frustration when it comes to choosing a plan, and it always feels like a little bit of a risk no matter what.
And you're exactly right, Julie. And that's why DLC and DPAC advocates you are in charge of your health. You are in charge of what happens to you. You can't just say, oh, well, they didn't cover that. Oh, well, I've got to switch insulin. Oh, well, I've got to switch my pump. You heard Amanda talk about this story from FFL. And there is a brown bag next week, Amanda, I think, about claims being denied and drugs being denied and all these things that happen. And if we could share one thing today, it's you have to advocate for yourself with your HR department, with your insurance company, even with the government, to make sure they're doing what you need them to do to manage your health. And when they tell you no, you never give up. 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 And as Winston Churchill said, we will fight them on the beaches. We will fight them in the streets. We will fight them. We will never give up. And that's exactly what we're in. We're in a fight. DPAC and DLC are doing everything in their power to fight insurance companies. And we are. We're fighting insurance companies. We're fighting PBMs who the insurance companies don't. We're fighting these people who are figuring out a way to put profit above people. And it should be the other way around. Now, the person that came on there and said, hey, all their stuff is free, they have an enlightened employer or enlightened health plan. And that's one thing George Huntley at DLC and Karen Gushhaber are preaching every single day with employers, educated employers, to say diabetes medications, diabetes devices should be free of cost because it has better outcomes. And that's what we've got to get to. That's where we've got to be. Sorry, I got on my soapbox.
No, we appreciate the soapbox. And somebody added, growing up, my parents never had deductibles or coinsurance. They just had a tiny copay, and that how much insurance has transformed even in just a decade and with all the changes that Congress made back when the Affordable Care Act happened, I mean, it does feel like in some ways you have to get your PhD every year when you try to make the best decision for the plan for you and your family. And I just want to make sure that I addressed another question we got was about, I believe, let me make sure, $35 Medicare copay. Is that for any brand of insulin? So if the insulin in Medicare is under the Part D prescription drug plan, if an insulin is a covered insulin product, then the $35 cap for the month's supply of insulin applies. I think I said that right. So that's the $35 is the cap for a month's supply of insulin. And if the insulin is a covered product in that Part D prescription drug plan, then the cap applies. So hopefully that answers your question there. And we'll jump and please continue. We love when folks use the question answer feature or the chat, getting a lot of good stuff. Oh, one more question. Insurance on the exchange is completely unaffordable for my family, and my doctors also do not take any exchange plans. Stewart, are there any alternatives to the exchange for people who are self-employed?
There are alternatives. I'm self-employed. My staff, we have health insurance for my staff through the association, the local chamber. So if you are self-employed and you have employees, you may very well have enough people to go through an association plan. Now, not to get too technical, association plans have the right to underwrite, unlike ERISA plans and private insurance, which means they can charge you more if you have diabetes than if you don't have diabetes. So that's an association plan. That's what I talked about.
The short answer is there are alternatives, but there's not really good alternatives.
No.
But it sounds like you're saying too that you can buy individual plans off exchange, but it's harder. What Stewart's saying, it's harder to know what you're buying. And so again, the alternatives are out there, but they're not really good alternatives, and that's definitely a disappointment for folks who are just like it said, the exchange plans are unaffordable already. I want to make sure we've got some more questions coming in, but I want to get to a couple other points as well before we answer the next round of questions. Amanda, you have a very different experience of diabetes and insurance because you were diagnosed at age 12 with type 1 diabetes. You just turned 25. Can you just tell me your experience with coverage and how that's been? And also, you're about to be 26. So what's on your radar as you start to look for insurance for some of our folks who are joining us who have that question as well?
Yeah, so I have only ever been on my parents' insurance, and I'm now beginning to learn more about the insurance marketplace before I turn 26. I just turned 25 last month, so that's my excuse as to why I haven't done dug too deep yet. But I currently have Kaiser Permanente. I live in Southern California, which is an HMO, so I can only see Kaiser doctors. I was diagnosed with diabetes at 12. And at that point, my dad switched our family plan from gold to platinum, which is one step higher, which means that we had lower costs when it comes to copay, deductible, lower pharmacy costs, more coverage if I get hospitalized, lower costs for medical devices, but higher premiums. And I was going to the doctor more often, got more medications, etc. So this made sense for us. And I'm grateful that I had that plan, that I have that plan. And I live in LA, and I went to the East Coast for school. So for a time I had both Kaiser and student insurance. But if I remember correctly, I didn't really utilize it that much. I think I was hospitalized once, and then Kaiser just paid for that. But I will say, when I was first diagnosed with diabetes, my endocrinologist was really terrible, like as a doctor and a person, just like terrible. And we couldn't switch because there was only one pediatric endocrinologist. And Kaiser being an HMO, I couldn't see someone outside of network. I couldn't see someone outside Kaiser. And I remember there being like significant difficulty there. And that's something that, looking forward, I will also keep on my radar, just like looking up the doctors available to me under a certain plan. Especially if it's a plan that is where it's difficult to see someone outside of network. basically just trying to see if making sure what the options are, that I have options. At that time, I think we ended up switching locations to a different Kaiser hospital, which was much farther, which was kind of inconvenient. And then the second part of your question, what's on my radar as I look at the insurance market for the first time? I'm currently, I'm grateful to say that I have doctors that I'm familiar with who I like finally, and I have a routine after many trials and tribulations. And if I go on employer insurance next year, I will be giving that up. And my current plan, as I mentioned, is the platinum one. And so if I want to keep platinum, despite not being on my family's plan, I'll have to pay some really high premiums. And I don't know if I can afford that as an individual person, especially someone who just turned 26. So I have a decision to make, which is to switch to employer insurance or buy an individual plan to keep the same insurance that I grew up with. And if I choose the latter, also just a decision between somehow trying to afford platinum and then otherwise downgrading. And then I admit I was not even sure what to look for. So I asked around a lot, like prior to this brown bag, and I asked a lot of my friends with diabetes and some of our DPAC advocates as well, actually, shout out to Torin. And I was hearing a lot of different people's experiences. Basically, when it comes down to it, I'm looking for what medications are on the formulary in that plan. I know we kind of covered this earlier, and whether the medications I currently take are on the formulary and what tier they're on, because I don't want to have to switch medications if I can help it, of course. How much copays will be, premiums, etc. I know Julie earlier you mentioned cost estimation tools. I haven't used those yet, but that's something I'll definitely be looking into. And then, as I mentioned, looking into the selection of doctors and specialists that I have and doing as much research as I can into that. Luckily, we live in an era where I can do so much research about this online and see what other people have said as well. So that's what basically I'll be looking into this year.
You know, Julie, if you're 26 years old or you're turning 26, the Diabetes Link has a series of informational videos and information that DLC and DPAC have helped them put together specifically for those young adults that are 25, getting ready to turn 26 and coming off their parents' plans. So if that's an issue, I would really encourage people to go to the diabeteslink.org. I believe Amanda is it. I think it's diabeteslink.org, and look for their insurance stuff on that turning 26, because they've got a lot of good info on there.
Yeah, that's really helpful. And I think sometimes we just think, well, we'll ask our parents if you're a younger person. Well, as folks are making the points, insurance has changed a whole lot. And turning 26 used to just be any other birthday, except now it's a big deal as you've got to figure out a whole lot of things. And so, you know, Amanda, good luck to you in that. And it sounds like, especially reaching out and finding, I think if you're going to conferences like Children with Diabetes, by the way, I wanted to say, on the pediatric endocrinologist, there's a major shortage, right, of even doctors that people with diabetes can see. And so that's also compounding other issues, like how long the wait time is to get in, and can you even find another one in your network? And so these are very real problems that we, you know, the list of policy and worlds that we would have if we could just goes on and on. But if you're going to conferences, if you have friends, other family that you could ask just about what their plans look like, especially if they're making considerations for a family member or for themselves as a person with diabetes. I think phoning a friend is a resource that I hadn't even thought of until you just mentioned it. So thank you for saying that. Stewart, Amanda, any final words or thoughts as we wrap up here? And just a quick note to folks, I've got just a quick slide to cover after this. And then also, if you still have questions, because I know this is a topic that, again, is very timely, please email us. I'm going to say this email address for DPAC. It's info@diabetespac.org. Please email us, and we would love to answer your question there as well. But Stewart, Amanda, any closing thoughts?
Yeah, well, just real quick, somebody asked a question, Julie, on there about the Medicare donut hole.
Oh, yes.
And on Medicare, I would just encourage people to talk to an insurance broker about a Medicare Advantage plan or a Medicare supplement. Those are there to pick up the coverages that Medicare doesn't have. And as Amanda talked earlier, depends on price. The more coverage you want, the more you pay for it. That's the way insurance companies work. So,
Stewart, how much is that insurance broker you're speaking of?
How much?
How much does it cost? Yeah.
I know it varies. It varies.
Okay.
Medicare supplement plans, we have plan A to plan J, I think. Okay. The Medicare Advantage plans, in that case, what happens is an insurance company actually takes over and Medicare doesn't pay the claims. The insurance company pays the claims, just like having private health insurance. And then they send their claims to Medicare, who reimburses them. So a Medicare Advantage program is just like having private health insurance when you're in Medicare. A Medicare supplement is exactly what it says. It supplements the coverage that Medicare gives you. So a whole lot of information there. We could spend a whole half hour on Medicare. Unfortunately for me, I'm now on Medicare. But the issues are, take advantage of all the resources out there. The issues are, do your homework, do your math, pick the right option for you. And if you screw up, go back and fix it the next time.
So and you said we could spend a whole half hour on Medicare. We did last month, actually, and had a great conversation. And we're talking about insurance brokers being worth their weight in gold. And sometimes there's no cost to get that advice or information. And so definitely utilizing that, which is why I kind of quibbed to you, Stewart, that
most of them are on commission, Julie, so they get a portion of the premiums.
Right. So that's exciting, as you know, as a member of the public. But please, you can find that on our Facebook page if you're interested. So please go there and take a look at Diabetes PAC Facebook page. And we would love for you to tune in if that's an area of interest. Again, info@diabetespac.org is our email address for those of you still with questions. And just one more thing I wanted to say too is that today is the last day to sign up for our Hill Day. So that is our chance to virtually go to Congress and make some asks that are really important to our community. You can learn all about that if you scan the QR code or just go to our website and look under Hill Day, but wanted to say today is the last day to sign up. And then all of our social media is also linked right there. We'll have plenty more information about that for you. You can find out what those dates it's at the end of October, the 25th, 26th, but just what that entails. And then lastly, next week, we've got another brown bag on navigating insurance denials. So we talked a whole lot about insurance, and it's not the most pleasant conversation or process to deal with, especially when you have an insurance denial. And so if that's something that you're interested in, understanding how to work around that when that happens, mark your calendars for October 19th. And if you can't join us live, again, we always record these events and make them available after. So we'd love to have you sign up if you are interested. And thank you so much for joining us today. We hope everybody has a great day. Thank you.